everybody. Let's get started. Give me half a sec. Here we go. Sorry. All right. Well, I'm not gonna wait too long. Let's just wait half a minute. Hello there, nerd, Danny, Brad. Hello. We are gonna get started in half a sec. Let's just let people join in. Hello, Miss Mama. Hello. We gonna wait one more second there and get started. You can see the screen in the time being. Right, let's get started. I think we can get started. People will join as we go. Guys, can you hear me well? Did the sound is the sound fine? I'm not certain about. I'm not. It's not the jab on yesterday. I'm serious. I'm not sure. Is the sound okay? Do you guys hear me well? Volume low. Okay, yeah. I suspected. Let me just be sure. Yeah. All right. Fine. It should be fine now. Just listen in Discord. Yeah. We had there a. Sadly, I didn't notice I was in such a rush to post it, and Tom was just posting, and we tried to avoid these situations, and we didn't realize we were about to post at the same time. It's yeah, not perfect timing, but I mean, those of you guys who know that I usually stream at this time of the day, you guys know how to join. That's why I recommend transferring the turning the bell on. This way you will not miss it. Pardon me for my voice, as it's a bit ripped today. Yeah. It's it just sort of happened. We try to avoid this, but it doesn't matter. How are you guys doing? I hope you guys are doing well today. Well, we can start off of NVIDIA, or we can start. Hello, Midwest. Good to see you. We can start off of NVIDIA. We can start off of the S&P. The S&P, those who know, we said we're probably going to see some bullish momentum. We inevitably going to open up with the gap subsequently to how yesterday it played out and how overnight is going to look like, right? Inevitably. We, in fact, had a bit of a rally in the morning overnight, if you will. So we ended up creating this gap because we rushed upwards, created a lot of momentum to the upside, a lot of dip buyers, if you will. And in reality, we actually rallied relatively high, but to be frank, it's not that high. I'll explain what I mean. Those of you who know, to be really attentive to higher highs, it is just to point out that this is the highest point of today. That's the 56.46. And then if you look back again, we have not broken any highs we haven't done before. Of course, we still have the gap all the way to 5667. So we've moved significantly inside into the gap. In fact, I'm impressed. As we opened up the day, my suspicion was that the attraction of the gap of the bots to close that gap will be rather rapid, and we will see a closure of the gap within the following 3 hours of the market open. But as you see, that's not what happened. The market actually were able to squeeze a little bit more. All in all, it's that same bullish momentum that we spoke about on the weekly. I'm assuming that's something that we notice, that there is a little bit more gas to correct. Hey, Stebo, good to see you. But all in all, we are basically running on fumes, and we have to, if we really want to keep our, keep your eyes on the prize, if you will. We know what the larger trend says, and larger trend is definitely directing us to the downside. Of course, we're gonna, instead of speculating, we're gonna look at the time frames and the momentum indicator. We use the stochastic RSI to determine what the market is telling us instead of speculating. All right, so let's get started. I see some people join, so we're good to start. All right, so let's go. 1 minute is not really interesting. Those of you who are new or haven't seen hear me speak about these things before, so it's not really important because it's going to flip over many times. Right now it's a little bit bullish, more on the bullish end, if you will, because we already have the K. In fact, let's do this in a way that will be easier for your eyes to see and understand this. I'm going to turn the K into green, right? So it's going to be distinctively green, and the D into red. I will make them also thicker so you can see them better. All right, that will probably help out a little bit. In fact, maybe that's too green, too shiny. Let's make it less shiny, like this less shiny, or like this less shiny, like this less shiny, right? Let's go. All right, so whenever you have this green, the K dominant, you're going to have more bullish momentum, more bullish outcome. But here it is on the 1 minute time frame, it's not really indicative what you should be. This is why we kind of try to skip as quick as we can to the larger time frames to get an indication of what is going on. What is the price action doing within the frameworks of? Is it an uptrend, or if we're going to look further outwards, we're going to realize it's more of a downtrend. Again, I'm kind of struggling to find the sitting there, but you see, right? The idea of that, if you will, a descending force. Pardon me for my inability to draw to save my own life, but you get the idea here. So let's switch over to the 5 minutes, because this is where stuff gets a little bit more interesting. Right now, again, 5 minutes is more indicative of bullish momentum, which is not all that surprising. As we said, we are probably seeing here, well, those who joined us today on the Discord. By the way, I will mention Discord later, those who don't know, and the Patreon and all the wonderful stuff we're forming here at Head and Shoulders. So this bullish momentum to me indicates that secondary shoulder that we're probably going to see in the relative time frame. I would guess probably by the time we finish the trading session, we're probably going to establish a bottom, whether it's here, or and start correcting to the upside. So again, prepare for a little bit more, what would seem like a little burst up to the upside. At least that's what it seems to be at the moment, right? 5 minutes, kind of done. Let's continue. Well, 30 minutes is kind of opposite to you. That is not surprising, actually. I was seeing this and expecting this to converge earlier throughout the day and see the structure turn over more bearish and take us to the downside. What does that mean in combination with the 5 minutes? Well, that's interesting. That almost shows us that the shoulder can be a little bit lower. It can actually descend a little bit here, staying within the frameworks of this, and then only then correcting, having the high actually match with the low of the previous shoulder, something akin to this, maybe even giving us an indication of a descending Head and Shoulders. So very indicative of more bearish momentum. I see. Okay, so let's continue with that. 45 minutes, not surprisingly so. As we said, oftentimes we're going to see 45 minutes accommodate. It's exactly that sort of middle ground, that Goldilocks zone in between the 30 minutes and the 1 hour. So it's going to be very indicative that the price action is going to probably drag us to the downside. Far more indicative than we're going to continue dwelling here. As you can see right now, we have no reasoning to say, well, the market will stay up on top for a long time. Why? Because we have the adjacent time frames also indicating of that same bearish momentum, potentially saying, well, we're not going to be accommodating that bullish momentum anymore. We're kind of running out, squeezing out, if you will. So now, well, hourly is indicating the same thing, that we're about to go through this. The forces will converge and then subsequently diverge, giving the bearish force, the bearish momentum, the upwards force becoming dominant. In other words, bringing us to the upside once converging, right? That is far more likely. Of course, once it does that, we'll be able to tell whether we're going to have some period of time that we will be testing the upside. Of course, it's not immediate. That probably indicates for us several hours of process, which coincidentally we still have to do. So not a big surprise there. Sorry for doing that. Not my intention. I'm forecasting that we're going to close that gap either today or worst case scenario by tomorrow. Now, the gap we've opened up just today, I think we're going to close it either by the end of this session or tomorrow, based upon the 1 hour, 45 minutes, and even the 30 minutes give me enough of an indication that the upcoming price action will be to the downside. We squeezed whatever we could out of this, or the market to be more precise, and in fact we're already starting to see this turnaround, that the market starting to overturn to the other side of things. So let's continue. We said 1 hour. 4 hours kind of starting to be the edge of what we really want to be looking at to determine the day-to-day price action. In fact, you're seeing this, what we've spoke about before. We've been still dragging on to the downside. Yes, this convergence, is that indicative of an uptrend? That's it, we finished up. Let's see, that really depends on what we will see on the daily. Daily will be far more indicative to us to what the price action is really going to do in the following days. In fact, we can extrapolate out of the daily chart. Probably, of course, we can extrapolate tomorrow, and probably by the midweek next week, around Tuesday, let's say, as we're gonna go, of course, we're gonna get with more certainty what we potentially see towards the weekend on the daily chart. The daily chart, those who know how to use it right, can give you an indication and the prediction ability of roughly about 6 to 7 candlesticks to maybe 8 candlesticks outwards if you do it right, giving you about a week time outwards to the future, if you do it right again. Daily, ladies and gents. Daily is a very important time frame. It is very much indicative of what we're about to experience, as I said, in the upcoming week or so. And if you know how to use this tool and you understand how important this is, and how important the fact of the matter that we're right about to break into the median zone of between the overbought and oversold territory, pointed to the downside, having dominance from the bearish momentum. In other words, this is very indicative that we are about to see roughly about a week or so, if you will, of more negative momentum that we can sustain for roughly a week is far more powerful, and we can do during that week a lot more than what we can do in what we can extrapolate from the 30 minutes, even the hourly chart, okay? Because the hourly chart allows us to predict this session, maybe a session or a session and a half outwards if we're really good at what we do. On the other hand, as we said, daily allows us to predict about a week out, which is quite significant, okay? So let's continue. The daily, as we said, negative, bearish, already indicative that is going to be somewhat amplified within the following days. We'll probably have tomorrow to see and confirm that action. And once we penetrate into that median zone, moving to the downside, we will have the momentum amplified to the downside. Once we do find ourselves in the oversold territory, as you know, the momentum will get even further amplified, and we will see even further down action, right? So that price action that we speak about right now, again, this is not financial advice, but my prediction that this wave to the downside potentially will allow us to close this gap from the 15th to the 14th to the 15th really of August. We can see the ceiling of it roughly resides at around 5,500, and the bottom, the floor, resides at $5,455. Okay, that's kind of that. That's the range I'm looking at based upon what we see here. Okay, this combining with the rest of the smaller time frames, slowly bringing us to test the bottom here at 555 area, and then 5555 really, and back to that even further down, subsequently into that gap. That's my expectation to the from the daily. Now let's look at the weekly. The weekly is actually the one that is very confusing, and I said this is part of the process that we're still completing, almost squeezing out that momentum as we're going. I would argue that we have still one day, and I've been talking about this throughout the week. We have one day to finalize this candlestick on the weekly, and my argument is that based upon what we see on the smaller time frames, on that turnaround and the turnaround of the price action on the other smaller time frames, inevitably, subsequently, this thing will cross. Okay, we're going to have a cross here, giving way to the bullish momentum breaking down and giving way to the bearish momentum taking dominance. Once the bearish momentum is dominant, you know what that means, even further amplification and bringing us to the downside. That's basically a directional indicator as well. It gives us an idea which direction is dominant. Okay, to put it in really, really simple terms, if, of course, read right. Monthly, didn't change. I'm not gonna bother with you guys jumping to the 3 months, 6 months, 12 months. We spoke about this a billion times, I think, in the rest of the videos. You can freely jump to the older videos and take a look and get an idea how things look like right there. So you'll understand why I'm gonna jump over these, because these are just not as important. I wanna continue to questions. If we want to take a look at NVIDIA before we go to questions, nothing really all that surprising. If you remember yesterday, right before we finished the session, I actually drew this line, how there was another line here that was orange, like that, implying that we're gonna basically see if it was on, I think, the daily. Yes, I think it was on the daily or hourly, somewhere there. That was implying, yeah, well, hourly probably. Not daily, 4 hourly, if anything. So I was implying that we're going to see something akin to this. We're going to see the price action go down to where it is. Correct, but not correct all the way up. In fact, I removed the orange, but did not remove the purple. So you see, we got roughly what I was expecting, right? What we were talking about yesterday in the live. It was very, very long. Shout out to all the amazing people that stayed or even, came back and forth, doesn't matter. Shout out to all the amazing people who joined us on the NVIDIA Live yesterday. I know it was tremendously long, but I would argue that it was tremendously fun. A lot of fun jokes, just a cool hangout. It was a cool hangout the way I see it, and we got to talk about NVIDIA, watch the earnings together. It was tremendous fun. So shout out to all you legends who did that, or just watched it later. Doesn't matter, really. So yeah, 1 hour. I mean, should we really be surprised that we're seeing the same indication on the larger assets that we Mag 7, if you will, that we have correlated from the S&P and Nasdaq, where we're familiar with? Should we be surprised all that much that they move all in tandem, and we basically correct downwards pretty much in tandem, even if NVIDIA has more push to the upside, which it should have had, hypothetically. Most of you would have expected that. Why? Because we'll double beat, right? We spoke about this yesterday. Reality, what did we get? Barely a correction. That is a very strong indicative behavior of a correction. Remember, we've been preparing for this throughout the last week. Throughout the entire week, we were preparing for this. People were saying I'm insane. There you go. That's the outcome. Don't argue with technicals. That's my argument. Let's remove that because that's in the way. So yes, we have had a bit of a correction, but notice it still is a distinct downtrend. All right, so that is that. What else did I want to cover? I mean, look, guys, we knew this was coming. We're still not certain of everything. We're not biased, right? We know how to zoom out. We want to believe that we're reading this correctly, but we have to be objective. This downtrend, and the way that we're getting lower highs, pardon me, my inability to draw, are very much indicative of a downtrend. Does that mean but it will all result in an actual overarching, drop and a breakdown? Well, that's what we see on the larger time frames. Remember, that's why right now here's the poop from yesterday, Mr. Henke. So yeah, I mean, right now our assessment is as such. Why? Because we pretty much squeezed out all the bullish momentum we had, and that's the monthly time frame. So even if we can predict 2 months out from this chart, letting us know that we're going to have a correction, even if it's going to be super steep and super rapid, within 2 months, we can easily, those who've been on the call yesterday know I called out the supports, which is the S1 would be 110, S2 would be 100, S3 will be the range between 91 and 68 right here, and 87.4. That's where we see basically these three supports. I know it's a bit off because it's on it was drawn on a smaller time frame. And yes, we're already starting to see indication of that movement forming. But is that the end of all things? Are we certain that's going to be the case? Again, that's why we go look at the indices, because if the individual asset indicates to you that we're going to have a breakdown, but the indices are telling you otherwise, I'm going to tell you that it's far more likely, from my experience, that what you will have is what you see on the indices play out more than what you see on the individual asset. But worse or better, depending on your view on things, is when the indices and the individual assets are in agreement on what's going to happen, right? If they are both in agreement that the market is going to go for a deeper correction, my personal recommendation would be to prepare yourself in whichever you find necessary. But be aware that that is the case. Does that mean you have to sell off everything? No, we just spoke about this today in Tom's Academy. Those of you who have not yet joined and missed out on the $35 tier that was open for 2 straight years, and Tom was arguing with me and keeping it open for longer, cheaper. Well, sorry, now it's $100 a month, but let me be frank, it still is stupid cheap. It is just stupid dirt cheap, literally. It's like buying a Lambo for $500. That would be a brand new Lambo. I'm sorry, that's the reality. That's the quality of the course. You're not going to get a senior analyst from Deloitte whose job it was to do these things on a daily basis, analyzing these and going through the balance sheets and analyzing these companies, teaching you how to evaluate companies. That is like, I'm not even kidding, like buying a house for $1,000. That is ridiculous. So I highly recommend, even at the current price, those who are not yet subscribed to Tom's Academy, I highly recommend. My academy right now is locked. I'm so sorry. I love you much, ladies and gents, but it is locked. I want to show you our Discord and brag. That's, by the way, Tom's post and summary about NVIDIA. Highly recommended. Tom posted it all over our Discord. Those who are not part of the Discord, highly recommended to join. That way you will be always up to speed to what Tom's thinking, what I'm thinking about the Zoom calls, meetings, all sorts of fun stuff we do. Also, I highly recommend checking out my Patreon. The link is in the description below. That will give you access to our members channels, to our Zoom calls, to the archive of the previous calls and all that wonderful stuff. Stock threads, which we have Tim, our head admin, a legend in his own right, somebody I highly recommend speaking to if you're into options, and Arnon as well, our moderator. He's not here right now. Shout out to Elrond as well, doing an amazing job keeping the place neat and tidy and in an order. There's Tom's Academy, the one I was talking about. You have all the lectures here when you join, that you can catch up with everything Tom was doing so far and is doing, enjoying the rest of the Zoom calls we do on the monthly basis. My academy right now is locked, so sorry. Have openings soon. I do have an opening for our OG members. Those who are in the members, feel free to get in touch with me. You guys, I have a spot for you. What else? Yeah, that's it. I think that's kind of what I wanted to say about that. And now let's look at the chat, questions, and all the great stuff. Talk to me, ladies and gents. Question. Oh, wait. Before I drop down there, I was at Midwest. The announcement. Gera link. Rob Gera link is in the announcement. Rob Gera. Send Discord mess. By the way, if you want to sign up to the Patreon, it's only the paid tiers are the ones who get access. The free membership does not grant you access. Sorry, the Patreon is merely a gateway. It's just a tool that automatically sort of goes through this process of making sure we have paid members, unpaid members, all that stuff. But otherwise, Patreon is just, go to Discord, make sure you're a Patreon if you want to, and of course, patronage will give you a lot more stuff. I don't want to ramble about it for too long. Thanks, Nanny. Okay, yeah. Nanny's magic. Thank you very much. Nanny is a huge help right here. In fact, let me do something here. Miss Nanny, I'm going to give you... You are going to be also a moderator here. I highly trust you. You are now, from now on here, a moderator, Miss Nanny. All right. What else? Red and green called on the trading. Brad, that's stochastic RSI. I just changed them to be green and red for you. For convenience of understanding that the blue line is really the bullish momentum, okay, the bullish forces, The orange are the bearish forces. The blue is the K, the D. Okay, they all derive from price change from volume over a period of time. It's like a moving average, and the convergences between the two forces. Because remember, the market, it's not a turn-based game. The market is being bought and sold at the same time. So what we are seeing is the convergence of these forces to who is more dominant at the given time, and when we run the course of our capabilities, if you will, given the volume. And this tool, what it does, it takes all these parameters, brings them to a single spot, measures them in a very convenient visual form, and gives it to us so we can read what the potential outcome of the current price action is. I hope that gave you a good explanation. It's called the stochastic RSI. Usually people use RSI. We prefer to use stochastic RSI because at the same time, while actually ignoring abnormalities, it gives you more of an exponential sort of further outlook on the market. Broader spectrum of movement, if you will. Less day of be careful. Remember, don't FOMO, still 4 months before 2024 ends. Mike, very good. Mike, very good, very good, very good notice. Mike is very correct. We don't know whether the Fed will start cutting soon, and we will see what we saw in the post the dot-com bubble. And when the Fed start to cut is when actually the market drops, which is in the average sort of mind, it's counterintuitive. That's not how things work. And I mean, in fact, the argument is that if you look at history, that has been the reality. It's somewhat convoluted. I don't want to sort of ramble about it non-stop. We talk about it in depth in the community, but all these forces are combined, whether it's the bonds, the stock market, oil, inflation, interest rates, supply chain subsequently. It sort of affects everything, which is also connected highly to oil. To understand how all these things create consumer confidence, consumer strength, all of savings, national GDP, national debt, all of it combined into a singular formula, and of course technicals. This is how we truly get to the outcome of our conclusion of what we should be doing in the market. That's kind of how it works. My pleasure, Nanny. Thank you. You're awesome. All of you guys and girls are absolutely tremendously awesome. You are the making parts of this community. Another maybe notice about the Patreon. Of course, those who are members of my academy, you don't need to. You're, for members for life. It is what it is. People who don't know, but the current tier of the $10 on Patreon is limited to 1,000 members, and it's only $10. And later, when it's gonna come to 1,000 members, it's gonna get automatically locked and said and done with, all done and closed and locked. So people, please don't complain to us that we don't warn you. Here we are. I'm starting to give a warning, and gajillion days, months in advance before that thing closes, so you guys can join in. It's only $10 a month. There is no private server on the entirety of Discord that gives you nowhere near just the fraction of the value we make sure you guys get, and we put all that money back into the community. I assure you that in various ways, our time, our efforts as well. So that is just basically is getting the community for free. I highly recommend. Don't tell me later that we didn't warn and say that eventually it will get closed and locked. So, okay, we looked at NVIDIA. By the way, those who didn't know, a firm surprised with amazing earnings and just blew it out of the water. Just crazy stuff. I mean, a double beat, 10% on revenue, almost, well, 9%, let's call it 9 and a bit. 70.87% on EP on earnings. So, I mean, they just blew it out of the water. And in fact, I'm highly surprised because Max, Max, first of all, was highly happy about this and highly positive, of course. Very great quarter they had. my argument was that I didn't. First of all, they blew. I mean, if you really look at it, what they've done throughout the night, we had a major support and resistance force here, so not surprising. They got held by this area, retested it very rapidly, and were able to continue all the way to the next area, to the next resistance, if you will, 4309. Tremendous high. This is a crazy day for a firm. Even I'm tremendously impressed. I actually, in fact, was more prepared to see them drop back down below the 50% retracement, which puts us at 30.55, expecting not such an explosive quarter because Max is very conservative. He knows when to tighten down towards recessionary times, although he probably recognized that things are not that bad and allowed more credit to be flowing in the time being. So pretty impressive. I mean, all in all, wow, a firm killed it, absolutely killed it. Sadly, I think that's all it is. And the firm, as amazing as it is, and we know it's traded by the pros of the industry, and it's a highly volatile asset. So all in all, it's not that surprising. Those who are familiar with the asset, this is rather normal. All in all, I mean, let's look at this, right? Let's see. That gives us 36%. Still, you know what? Actually, very excessive. Well, last time we seen the highest rally, we had like what, 26% on a quick rally. We know that on the day that stock can squeeze 10% on the daily basis. Of course, the same way it does it upwards, it does it downwards. When we've seen such abnormal corrections happen before, I am impressed. Does it change anything? No, it just says that now for the following days, we're going to be, instead of testing this 50 back and forth, which actually makes a lot of sense for the stock on the current condition, retesting these levels, basically doing some testing, very strong level. In fact, I'm not going to be surprised if we're going to get locked in that 37.17 or 35.73. So the entire range, we're going to get locked in here for a while. How long? Hard to say. It might as well take days, and then subsequently break back down to this level. If the market permissive and requires so to continue, we're going to break to lower lows. That is the overarching trend. Same thing, it's unavoidable, like it or not. Right now the market is breaking downwards, and this is impressive, right? This is very, very impressive. But the market is still, if you are attentive to the overall trend and you exclude the exceptions, the market is definitely trending to the downside and have been doing so for a long time. Small caps, large caps, don't matter. Yeah. All right. Let's see what we have in the questions. What's going on there? Yeah, my good point. You said that about August. Yes, we've covered that. Bread. That is magical trick of magic. It's convoluted. There are many levels. There's a technique. There's a method to the madness. You will be one day, if you said you're very interested in the academy, when you'll sign up, I promise I'll teach you all of that and then some. It is all. I cannot start teaching you something. It's almost like trying to ask me how to do fractions when you don't know yet how to count. It will end up very much convoluted and just confusing. There's a reason why those are long sessions that I do one-on-one and teach students how to do exactly that and understand the importance of particular levels of golden pockets, particular assets. It's not all that simple. And sadly, there are a lot of people in the market who explain a lot, on YouTube and various places that I've stumbled upon, explain various things that are either incorrect or very misleading, or just partial at best. So I do not half-ass, and that's why I don't have just some, some recorded course and good luck with that sort of thing, because that doesn't work. You can ask my students. I do not half-ass. I give my heart and soul to my students because I truly want them to succeed. And I'm not gonna half-ass that either. Sorry. Yes, Michael, very good. Michael Rosenberg, absolutely, salute, very good point. Anything that is economy related, and especially a firm, because it has an extensive array of partnerships with a lot of service providers, and when they're suffering, firms suffer subsequently. It goes hand in hand. Michael, chapeau to you. Absolutely, you are my friend on point. No, magic, chef's kiss, as we say. Problem in the economy not doing well, and people can't pay their bills. The beauty with Affirm, those who don't know, they don't have delinquency fees, right? And they are a very accommodating company. They try to make things a little bit easier on people. Mm, they don't have a lot of weird commissions that a lot of other companies have. Um, they don't have the commissions. They don't have on top commissions. That they are very accommodating. They're absolutely great. So even at hard times, they will be doing better. They'll be doing a lot better. Sorry, but what the problem with the, well, problem and the good thing about them, if you will, is that they know how to tighten up, and because they allow you, basically the way it works is you can be a client of theirs for a year or so, right? Get your line of credit multiple times extended to you, and suddenly when they realize the economy is struggling for what seemingly going to be no good reason, no justifiable reason, they will not allow you to have a particular purchase using their service. They will say, you know what, right now we fear that people will not be able to pay back, right? And will fall into delinquency. So we try. So basically, they don't charge a lot of fees, but they try to avoid getting into a situation where these fees are even needed, right? They kind of, it's almost this trust-based system, and which potentially brings them better clientele. Yes, there is. Um, in Israel, it's known as. I mean, it's presented as a commission that you pay. I spoke about this various times, guys, about the S triple Q. Those who don't know, yes, there is a time decay associated with the S triple Q. Um, in the US, it's known as time decay, very much like options. And here we get it as a commission form, which, I mean, you pay one way or another. If you hold a sufficient amount of it, the dividends that you get pay for that difference. And of course, if you DCA, and you shouldn't be holding it forever, it is a insurance tool that you buy into at particular times. Otherwise, it's a great trade for options traders. You can trade it up and down in various ways. It's easily predictable. So it's more of a professional tool, if you will. I would argue uh, that you shouldn't touch it if you don't understand it well, just to put it in simple terms. But yes, there is that JFP 2672. I answered your question. Now, Brad, what's the diagonal green red channel? That is linear regression channel. It's a linear regression channel. It basically allows you to find the median, the resistance, and the support. Of course, there is a system to the madness. It's not all that straightforward, simple. You will see it somewhat differently, of course. But that's linear regression channel. It's the same tool you probably learned how to use in primary school. Same one. Charting is not all that different from what you learn in primary school. It's just there are a lot more rules to apply here, a lot more tools to use. Of course, it's not going to be that basic. You get the idea, but it's not all that different when compared. JFP, my pleasure, my pleasure. Ladies and gents, smash the like, subscribe, all that great stuff. Don't forget, I think we've covered what we wanted to cover. Palantir is enjoying the day-to-day as well. Before I forget, we're about I'm about to launch and do a lot more meetings in the Patreon. Again, as I said, remember that thing is limited. Being a free member on Patreon does not grant you these permissions. In order to be a member on Discord, you need to be a paid member on Patreon. The link is in the description below. It's only $10, and you get to participate in everything we give to our members. That is not the Academy that I'm talking about. The Academy is a whole separate thing, just to be clear here. And I highly recommend subscribing to Tom's Academy, because that gives you access to his Academy. That is right now open and have many more new spots. And it's an instrumental, fundamental tool to anyone and everyone in the market. Doesn't matter, investor, trader, all alike, especially investors, or people who are long-term traders, to be more precise. That is that. Let's go back to the chart. Questions, if anybody, anything. And there we go. We're forming our head and shoulders as predicted. So far, so good. Let's continue. Boys and girls, questions? What we want to know? Do we want to know? Today's session is not going to be as long as yesterday. I'm sorry. Today we don't have any earnings that we want to listen to that are that important. We are expecting everything we saw on the technicals, nothing new that we didn't cover before. We're just catching up just to make sure we're up to speed here, right? That's that. Those who didn't watch, I highly recommend. It's super long. It was almost a 4-hour long stream. It was like 3 hours and almost 44 minutes, kind of. So it was super long, I know, but you have there the entire call. We have our discussions. You see the technical analysis, all the banter and nonsense that we had yesterday. Ladies and gents, come on. Questions and wonderful stuff of that sort. Comments. Tell me how much you disagree with me, how wrong I am. I don't care. We're not here for drama. Remember, in our community, we don't do drama. We do analysis. We're adults here. Nanny, thank you very much again. You're awesome. Yes. I have a birthday. Now I'm gonna start. Now the avalanche will start. Yeah. Thank you. Thank you, everyone, in advance. As you guys can see, I don't mind birthday or not. I'm here to hang out with you guys, to talk about the market. It's something I would do anyways. Doesn't matter, rain or sunshine. I love the market. It's something I've been doing for a very long time. It's in my blood. A day away from the market for me is it's like a drug addict without his thing. So yeah. Come on, ladies and gents. Questions, comments, anything you want to say. I'll read out your comment out loud if you want to, as long as it's not very nasty. Just mildly nasty is acceptable. Greg, first of all, happy B-Day. Thank you very much. Magellan, thank you. Curious if you have experimented with AI LLMs, if you're trading analysis. You mean assets that are AI related? I mean, we're talking about NVIDIA. It's highly AI related. If you're talking about AI platform developers of that something of that sort, no, I can nothing in direct something that I checked out. No. I mean, everything, all the peripheries right now are the ones that are publicly traded, and those are the ones we look at. But they are very indicative of how much the market is still in its diapers. The large language models companies, I mean, in what sense? Like, what you have to be more specific with the question. Maybe I'm not sure. Utilization of ChatGPT for stock analysis. I remember I kind of played around with it. No, it's a good question, Annie. It is a very good question. It is actually a very good question. What Magellan is asking, it's something that has been debated for quite a long time, and I've been hearing about it since I entered the industry. How people back then were talking about how AI, of course, back then was just I'm not going to say in what form, but people were saying that this is going to be something that eventually will come and will happen. Of course, you already had you already have systems that are based upon that are robotic and predictive in their nature, right? But they're not AI based. I've been hearing about this for a very long time, over a decade basically, and so far nothing. I haven't seen anything that is substantially, realistically useful and trustworthy and well, not just reliable. I would say consistent, if at all, and more so, it's very complex because it's almost like you're trying to make a fish climb a tree, if you will. Maybe under some very unique conditions, it's doable, but it will happen eventually, right? It will happen eventually. But the problem is that something that people often do not take into the consideration, we the people, the market experts, if you will relinquish our freedom and controls of the market very, very, very slowly, if at all. In fact, I would argue that for the market to either die and completely give way to AI or something of that sort, we either need total war on Earth or world peace. And even that just will make the market evolve into, I mean, total war will make it die for a while until we're going to get some form of peace and stability. And total peace will actually disrupt it for a while, but then normalize a lot of things. And make it so that AI will be inherently I would say 50% force of the market, but we are so far. We are decades away. We're so far away from everything simply because regulation, testing, it's so far off. I wouldn't assume it's around the corner, and yeah. I mean that's kind of the best I can say about that thing. It will eventually happen, but we will relinquish. And I know there's also this limit with regards to AI. There is a threshold that doesn't seem to be able to go through, even on the larger scales. When you look at the charts on the larger scale, there is this curve that is not able to break. It's this diagonal curve. I don't remember how they called it. You should know, Magellan, I think you might know what I'm talking about if you're into that realm. And I would argue that part of things will also play a big part into why AI is not yet able to penetrate and go through that sort of maybe someday, not yet. Like I said, not yet. And our inability to relinquish our freedom and our control over the market will inherently not allow this to happen anytime soon. That's just my opinion. But it's, like I said, not financial advice. None of this is just my own meandering ramblings about AI. Things. Market. Flat tomorrow. Wait, we market are closed tomorrow then. What did I miss? Shit. Ooh, I'm not gonna pretend what about... You guys know me. Well, what do we have tomorrow? How did I miss this? Damn. Do we have a bank holiday tomorrow? No, I mean, why are you saying this? No, we don't have. It doesn't seem like what? Market are closed tomorrow, guys. Have I missed something? My guys, correct me if I'm wrong. Why is it not showing me? It didn't. Interesting. Well. Ooh, interesting. That means today's session is the closure of the week. That's wait for power hour. I would argue that we might have power hour. Okay, we might have power hour. Yeah. Thank you for informing me, guys and girls. Annie, you in particular, thank you. How did I miss this? Sorry, I'm having all sorts of emails going on here. What is this one? Yeah. So where were we? Yes, I read better. I will do that. All right. How can we trade tomorrow? Yeah. Yeah, no, but Labor Day close on Monday. Oh, I'm a moron. Now I see. Okay, that makes sense. Let me check it out. Okay, that I see. I'm a moron. Yay. Yay. Monday, Labor Day. What am I? Monday. Yeah, okay, yeah, now I see it's empty. Okay. So now we're opening Tuesday, so we still have Friday, so less likely, I mean, that removes the likelihood of power hour. Okay, there's that. Thank you for clarifying that to me, the stupid idiot. Okay. Gotcha. Thank you, boys and girls. No, I mean Friday. In that case, no. So yeah, back to Brad's question. No, then expect tomorrow to play out as we see the momentum, as we saw the momentum throughout when we ran through the time frames. Preparing for Monday. What do we have then? In fact, you know what? That might be very indicative potentially, and just that's kind of my experience, speaking out of my own experience of things, that might mean tomorrow might be very volatile, like very volatile, and right before the closure, right before the market closes, we can get a very volatile day, which then will lock people in, so it can be very screwy. Yeah, that is highly potential. I mean, if we look at the time frames, we already have the indication for a deeper correction than what we saw, the day before. So, like taking us to the next low, if you will, right? Indices, assets doesn't matter. So, I would argue tomorrow can be actually very volatile and bring us very low. In fact, closing towards that gap that we spoke about. Yeah, no, guys, you're good. You're good. It was me who was off. I was not being attentive. Boys and girls, other questions? Anything else before we close today's live? I mean, we're already starting to see the market trying to pull down, right? So not that surprising. You see, just like how I told you, even on the 5 minutes, the market likes to do that. Market doesn't just this indicator doesn't just work up and down. It reads through the waves, right? It gives you a visual form of the wave. The wave right now is pulling downwards. It's a bigger wave. Here it was going up. Here it's going down. You see, it's not that straightforward. You need to know how to read these things and what you're looking for. So it's very important. Important, yes. Right. So what are we doing? We're pulling down. I mean, we were just talking about this, guys. We're just talking about this. Should we be that surprised? The market, I think, is starting to pull to the downside. Here we have the red, which is the bearish dominant, giving us basically a lot more volume. We're accelerating into reverse, right? We were running fast, slowing down, hit zero. Now we accelerate in reverse, right? Does that make sense to all ya? Thingy. I'm doing a great. Wait. I have something for this. Where is that? Let's see if I can make the sound. A drum roll somewhere. I don't. Anyway. We do have this, though.
Affirm to 17, affirm to 17. Stop asking questions.
Yeah, stop asking questions. Affirm to 17. Okay, what am I missing? Let's see. Okay, I see. My bad, blog. Okay. You see September 6th, yeah. Okay, right. Any further questions, ladies and gents, before we adjourn today's meeting? I think we ran its course. People will not want to watch this long, me ramble and stuff. In the context of what we're saying, could be. All right, well, ladies and gents, if we have no questions, we're gonna adjourn this live. I'll see you on Discord then. Sorry for my voice, it's slowly dying. Greg, you're Brad, you're awesome. I appreciate you aching for me doing these lives. That really is awesome. No joke. That's it. All right. I think since I'm not getting any questions here, I don't know if my chat is delayed or something. Maybe that's what's going on. I don't know. Anywho, ladies and gents, as I said, we've been on for about an hour here. My pleasure, guys. You're awesome. I think you thanked me enough for the entire community twice. You're a legend. Like a chocolate. Great update. Yeah, no, Mike. My pleasure. Guys, love you much. See you on the next call. Bye bye. Have a great evening, afternoon, evening, morning, whatever you have. See you later. Bye bye.